So without further ado, I want to introduce our next panel, which is being moderated by Toufic Adlouni. Toufic is a close friend and partner to the firm. Toufic is an emerging technology lawyer and an entrepreneur. He primarily works in the startup community, aiding high growth companies in the technology sector for equity financing, IP protection, and navigating various legal challenges. He has been leveraging his knowledge and expertise on regulatory issues affecting the digital asset and blockchain market, both within Canada and globally, to advise a number of strong, large market participants. Specifically today, he's interested in regulatory compliance issues that affect digital asset users and issuers in order to enhance the value of his clients and their attractiveness to investors on a global scale. Although he's always been passionate about entrepreneurship, I know that law is Toufic's plan B after a failed career in soccer at playing football for Chelsea FC. That's just a little joke between us. But Toufic, I will let you take it away, introduce the panelists, and again, I'll sort getting the rest of the attendees back online. Thanks, guys, for the patience.
Sure, thanks for that. And by the way, it was a miserably failed attempt. I didn't even make it to their youth academy, but I tried. So thank you, Zach. I appreciate the introduction and excited to be able to moderate this panel with everyone here. So we are going to be talking about some interesting subjects around regulatory challenges that kind of exchanges are facing. What I'm hoping to have is kind of an open and interesting dialogue amongst everyone. So do feel free to chime in and get a conversation going, because no one likes a question answer panel, so to speak. So with that in mind, let's take a couple of minutes here and just introduce our panelists. So we'll start off here on no particular order, but I'll start off with Shane, if you want to give us your 30-second pitch.
Sure. Thanks so much for having me. Everyone, I'm Shane Molidor. I serve as the Global Head of Business Development at AscendEX, formerly known as BitMax. We had a successful rebrand this week. As the Head of Business Development, I oversee all the project listings that occur on the platform. I also quarterback the institutional onboarding process. So that's all major buy-side and sell-side institutions. Prior to my time at AscendEX, I served as the global head of FBG1, which is the trading arm of FBG Capital, one of China's largest cryptocurrency hedge funds. And prior to that, I was one of the first hires at Gemini, working alongside the Winklevoss twins at the New York-based cryptocurrency exchange. So I've been professionally active in the cryptocurrency ecosystem since 2015. And been able to develop a pretty good pulse on evolving regulatory environments as they relate to infrastructure companies, explicitly exchanges and custody providers. But again, super excited to be here, and thanks so much for having us.
Thanks, Shane. Appreciate it. We'll go to Marcus next for his intro.
Thank you, Toufic. My name is Marcus Grubb. I'm Chief Executive of BlockEx, which is a London-based digital asset exchange platform provider. My background is about 25 years in investment banking capital markets, mainly in London and New York, in structured products, derivatives, and global equities. I then built and sold a small electronic exchange in derivatives in the early 2000s, 2000 to 2006. We sold SwapStream to Chicago Mercantile Exchange. And then I moved into commodities, spent about 10 years in gold and precious metals. I was Global Head of Investment, co-head at the World Gold Council, ran the ETF program in Europe and co-headed the GLD ETF in North America. Also did big deals in India, China, and also we took a private equity stake in a big gold exchange based in London. I moved into crypto relatively recently. I'm a bit of a newcomer to the space, DLT and blockchain about 2 years ago. And I'm now running BlockEx as the CEO in London, which is, as I said, it's a digital asset exchange, which has a primary issuance system, and it also has a white label trading system with a front to back capability, custody, banking, trading system, and exchange matching engine.
Thanks, Marcus. Michael?
Good afternoon, everyone. My name is Michael, president of Instacoin ATM here in Canada, based out of Montreal. We operate one of Canada's leading crypto ATM companies in Canada with over 130 machines from coast to coast. We offer multi-crypto solutions for fiat, either buying or selling. We've been around since 2015. Started off with a small operation of 10 machines here in Montreal, and grew it out to over 130 machines from across Canada.
Thanks, Michael. And I think we have a newcomer here, Connor. If you're online.
Connor's just assisting with moderating.
Oh, sorry about that.
No problem.
Okay, no worries. So I guess we're gonna get into some questions just to start off the conversation, and I'm hoping that we're gonna enlighten the members of the audience with some of the experiences that you guys have gone through, and in kind of navigating a bit of an interesting regulatory space, operating OTC exchange desks, ATMs, etc. One of the things that I'm always curious to hear about from a kind of exchange perspective is that a lot of exchanges, at least there's a bit of a truism in the crypto world that, if we set up an exchange offshore on in this small, insert small island nation, or small European nation, that in operating there, we're fine, we'll be okay in terms of the way in which, and in the places in which we operate. But as you guys know, that's not always the case, as a lot of times when dealing with clients in jurisdictions that is not your home jurisdiction, you're gonna potentially have to interact with the regulators in those jurisdictions. How are you guys finding, from a best practices perspective, how are you guys finding that you're navigating a bit of those challenges, seeing that you can't necessarily be compliant or try to be compliant in 198 countries or whatever it is? So what are kind of the best practices that you find to kind of still be able to operate your businesses globally?
Sure, I guess I can chime in here. There's a mantra that is I've always held true ever since my time working alongside the Winklevoss twins, and that is ask permission rather than forgiveness. Essentially, take the jurisdiction with the most draconian approach to regulation and try to follow best practices that are put forward by that jurisdiction. I think that it is a best practice to think of the cryptocurrency ecosystem as global and decentralized in nature. The risk in operating an exchange, which I could go into why that's a misnomer to call a platform like AscendEX an exchange, because we also handle custody operations as well. When you have a commingling of assets, you have this notion that one rotten apple could spoil the barrel. So you need to make sure that you are keeping abreast, again, of very draconian regulations that are put forward by various jurisdictions. For AscendEX, I can say we explicitly prohibit U.S. customers from onboarding onto the exchange, and we have a very rigorous approach to make sure that they don't find loopholes around that. So for example, we do periodic IP screenings. We require KYC, AML for anyone in order to deposit assets and trade on the platform. But again, I would loop back to this mantra of ask permission rather than forgiveness. I think most regulatory or compliance bodies will exercise retroactive retribution when there is more finality in terms of a global approach to regulation and compliance for cryptocurrency.
Perhaps I could come in and add something from the BlockEx perspective. I think we're a little bit different, and perhaps it's a little easier for us in that BlockEx was originally designed from inception as a white label solution. So we aren't a retail exchange, which means we tend to face off against the institutional customers that are on board with us with their existing customer bases. So for example, if it's say a large foreign exchange broker in the UK or Europe, we know all their customers are either going to be EU or UK or both. And then, we are based in London, so we're under the new regime with the FCA, the crypto asset business regime, or we're under the VASP licenses in the EU, which will eventually be replaced by the MiCAS rules when they come out in the middle of this year. So I guess it's a little easier for us in that we can, a little in a similar vein, we can decide which customers we will accept currently and which we won't. And we're based in an area where the regime is quite tough already, and it's going to get tougher. So we have full AML, full KYC, full onboarding process as part of our business as standard. And we face off against each business as it comes onto our platform. They tell us where the customers are based, and then we can deal with them. The other advantage is, because again we're white label, the business coming onto our platform to enter the crypto business for the first time may well be a regulated business already in another asset class. So they've already done AML and KYC on all their customers. Now we repeat that process, but it makes things a little bit simpler than accepting accounts from all over the world, which is much tougher.
Great point. Yeah, sorry, Michael.
No, I was just gonna say, I think I probably have it the easiest out of everyone here. I only deal with Canadians, seeing how we only deal with cash. FinTrack just recently last year started putting out some regulations in the space, and we operate pretty much in the exempt transactions where under $1,000 we don't do any IDing or of the clients. So that's our sweet spot, and our biggest thing is really enforcing that we keep those limits, that we respect those limits, and clients can't circumvent them and whatnot.
Yeah, interesting. Yeah, it's there is a bit of clarity on the ATM machine part, but with the changes in Canada around FinTrack recently, it's also brought up some interesting new subjects to discuss. But we won't bore our international audience with the Canadian context here. So one other thing that I see working with a lot of coin projects, and I saw, just looking over kind of the attendees and who's sponsoring the event, there's a lot of folks attending this conference that have launched a token or a coin or are looking to do so. And I know that a lot of times when we get started with them to get them listed on an exchange, it's there's quite a hefty disclosure schedule attached to the listing agreement, in which they have to essentially ask a bunch of answers, give you guys a bunch of answers that they may not have had the diligence in the way in which they issued out their tokens at the beginning, to kind of follow through with that. So maybe you can help these guys out a bit and kind of let them know, what is it exactly, if they have recently done a network launch or they're about to go through with it, what are certain things that they should really keep in mind today so that it can really facilitate their listing in the future?
I guess I can speak from probably a legality perspective, and then maybe from high-level business perspective. You generally need a legal opinion from a lawyer from the same jurisdiction as the issuing entity in which the TGE occurred, the token generation event occurred. And that legal opinion needs to explicitly state the token as a utility, i.e. deemed to be a commodity rather than a securitized asset. Without that, no major centralized exchange, whether it's AscendEX, Binance, Huobi, KuCoin, Gate.io, etc., will elect to list you with that sort of ambiguity. Generally speaking, most of these major centralized exchanges, especially those that are registered in APAC jurisdictions like AscendEX, AscendEX is a Singapore registered entity, will not list an asset if the issuing entity is domiciled in the United States. These are the items from a legality perspective. From a business perspective, I think, that's probably where token issuers and entrepreneurs are a little bit more well-versed. being able to explicitly speak about the narrative, why from a business perspective, the value proposition of the token is a utility, why it is essential for operation of the underlying network. I think maybe some of the questions within AscendEX's due diligence process that take a token issuer off guard would be those related to token emission structures and the cost basis associated with those tokens. The exchange or the centralized platform will oftentimes ask those sorts of things so they can get some sort of insights as to the market microstructure that is likely to occur once the token is listed and a liquidity event occurs and buyers and sellers actually have interaction with one another. So that's sort of high level from a business perspective, oftentimes where I see token projects flounder because they're not prepared to respond to those sorts of questions related to market microstructure.
And just to follow on, what would be your opinion of kind of founders having a substantial amount of tokens in their possession? Is that something that you guys kind of look favorably, unfavorably upon, or have a neutral perception towards?
Sure. So I think there's a couple ways to think about it. It's looking at the total token supply and the breakdown of that total token supply. And then within each slice of that pie, what the emission structure is. So that's the unlock structure. So there's nothing wrong with a founding team having, for example, 25% access to a total token supply. But if that 25% was unlocked and liquid immediately at TGE, that's a massive red flag, because those founders can then exit that position onto the market. And usually the bag holders in this position, those that would be buying against that sell pressure, are retail speculators. And that is, explicit unsavory activity. So generally what I like to see is a very conservative percentage of the total supply unlocked at TGE. And further, the cost basis associated with that unlocked percentage should be in line with the prevailing market price. And that prevents against aggressive profit taking at the expense of speculators that don't have access to primary investment opportunities.
I see, Marcus, you're nodding your head there. It seems like you got a couple of things to say.
Yeah, no, I think that makes complete sense. My background is previously in regulated capital markets. I guess the most experience I had, I was global head of equities at a major bank earlier in my career. So the same sorts of things apply. I would completely agree that, for a well-founded project, you shouldn't see the founders exiting a large amount of tokens early on in the listing. That doesn't send the right signals to the market, and of course it's detrimental to retail investors and speculators. So I think the well-founded projects, they have a unique proposition. They're looking to grow the proposition over a period of time. They want to keep that carry in the project. Obviously, some of them will use tokens to cover costs and other expenses. That activity all makes sense. I think I would agree. It's alarm bells ring when you see a major exit right at the start after the generation event and the listing. I think for us, again, the game's a little different in that we're slightly different structure from some of the other companies represented here today. We have done some ICOs in the past before the regulatory changes that happened in the market. And I think from here on, because our model is more of a white label model, we seek partners who want to build new digital markets. So we're not so much a platform where project originators will come and list their project on our exchange. We're looking more to build partnerships with larger institutions, so more building a bridge between traditional finance and assets and blockchain technology and crypto. And then they can use our primary and secondary platform to launch a new market. So we're typically not looking to do a single listing. We're looking to, for example, partner a large real estate business with a very big portfolio, multi-billion portfolio, and over a several-year period with them build a new digital market using our technology, both the primary issuance technology and the secondary trading. And that means as well that we're open more to the non-utility token markets where you need a lot more regulation. And that's, again, I think where the capital markets background is useful, because effectively these are securities. And so you are going to be, you're going to require the right kinds of licenses, both for primary issuance and secondary trading, that are required in other parts of the financial markets that are more heavily regulated. But it doesn't mean to say we won't look at utility tokens or do ICOs, IEOs. We will for the right kind of project. But basically, we're looking more to build partnerships and be the Intel inside providing the tech rather than effectively being an exchange where people come and list. That's not really what we do.
And for your clients that are using your platform here to build out, their exchange, what would be kind of their, I don't know if you can speak on their behalf, but just from experience, what would be kind of their insight there in terms of what are they looking for in terms of projects to list? You can, because you're in this dual area, you can even speak not only for the utility side, but also from the security side. Yeah.
Yeah, I think it is very interesting, and I think it's a very exciting time for the market. I think one of the newer trends, as well as the increase in KYC, AML, that's getting a lot stricter for exchanges in general. I think the other thing is that you're seeing blockchain technology and DLTs now being applied in non-finance areas, in e-commerce, in intellectual property, in music licensing and film. And many of those businesses, of course, are building a primary exchange for the actual intellectual property or the rights to be distributed. And typically they're based on obviously a very powerful database and even workflow systems on the other side to create the intellectual property and then map the rights and the economic reward to who creates the intellectual property. But many of them are then looking for a back-end system where they can tokenize those rights or those other assets, then secondarily trade them, and they need custody and they need banking rails. So where we get approached is we tend to get approached for that part, i.e. we can plug all of that into their vision of what a new kind of asset exchange looks like, because they're the subject matter experts in whatever it is they do. They may be gold traders, they may be sport and gaming people, they may be in music and film and in IP and licensing. So we're increasingly being approached by businesses like that, especially since the PayPal announcement last year and the change in the market that we've seen, which I think is very, very encouraging, because we think not only, of course, has the crypto market and DeFi and everything else got a long way to go, and there are many, many new innovations happening in that space right now. I think in several years' time, you're going to see blockchain and digital technology permeate many other industries. And all of those models will need a back-end system that allows the trading, the tokenization, the banking rails, and the custody solutions, which is really where we come in. So that side, I think, is very exciting. It's a long burn, but it's very exciting. On the ICO side, yeah, I think the activity we're seeing there at the moment has more been, I'd say, largely in the sports area. And gaming, and also in the loyalty sort of space, loyalty programs. And that is where I think there is still the model, the ICO model, the IEO model, where it's a utility token, not a security, is still very workable. So yeah, but I'd say, as I say, we're facing more now against those larger projects that want to build new regulated digital markets in different asset classes. That's where we're getting the bulk of approaches now.
That's interesting. I don't know if you guys have anything to comment on that. That was a good, interesting point on where the market's growing in that sector.
Yeah, I think we see a lot of sports and gaming applications. Recently Chili's, which is a European-based project that AscendEX had facilitated the follow-on listing for back in September of 2019. We've seen that emerge as a top 50 by market capitalization project. I think lots of widespread adoption, real life use case, whereas decentralized finance or NFTs to a certain extent, I think, are a little bit more popular with APAC retail, and those have recently boomed and had some retracements. But I see those as largely still science experiments. Per se, maybe not as accessible to a non-crypto native customer demographic, whereas sports and gaming, that truly sits at the nexus between digital assets and popular trends within mainstream adoption, I would say.
No, yeah, we've seen a great amount of actual work in there. Actually, my side company is in sports and gaming as well. We're right in it as well. As an extremely interesting part to kind of be in and kind of understand. So one thing that has been brought up is kind of this trend of decentralization, I guess, in the ecosystem. I know it sounds like kind of basic to say that there is decentralization in blockchain, as it's kind of the essence of the industry, but we did have essentially a movement to centralization at a certain point, and now we're kind of going back into this decentralization tendency. However, that's creating a whole new challenge on the KYC AML side, because you could essentially use Uniswap without any kind of KYC obligations and have the ability to kind of transact there, and then be able to actually receive liquidity from a decentralized kind of platform per se, without the necessity of having that ability to know or KYC, or have that middle institution be able to KYC correctly the people who are ultimately providing the liquidity. So maybe I'll throw this question on Michael. How does this unstoppable force meet this immovable object? And you don't need an answer for that, because that's it's a tough thing to solve too.
I don't know how to answer it right now. I'm trying to think of the right answer, but as it stands right now, we're doing what the regulators ask us to do. We keep operating as we've always operated. We operate those exempt transactions, and if it has to change, then we'll adapt to it. But as it stands right now, we're going to stay status quo on our end.
I think from the perspective of a centralized platform, you certainly have to keep abreast as to where the fiat on-ramp, off-ramps exist. So certainly a nefarious actor that has, let's say, ill-gotten assets, can interact with other buyers and sellers that are providing liquidity on an AMM, automated market making pool, that exists on one of these DEXs, decentralized exchanges. So now they've swapped their ill-gotten assets and altcoin X into ETH. Now they have ETH in hand. Now they want to get fiat. Well, all major fiat on-ramp platforms, crypto to fiat platforms, have very, very onerous regulatory and compliance protocols. Most of these major centralized exchanges that have crypto to fiat trading have transaction monitoring, and also certain addresses that are blacklists. If there's any sort of hack that occurs in the system, then there's very robust transaction monitoring that occurs. And if these assets then find their way onto the centralized platform, well, then appropriate authorities would be contacted. That individual's account on the centralized exchange would be frozen, because again, the platform also facilitates custody operations. So the assets are then held in an omnibus account. So again, the nefarious actor would no longer have access to them. I think the whole system is obviously only as strong as the weakest player here. So if you have crypto to fiat exchanges that are allowed to continue to operate unkept, and they don't have good KYC AML in place, well, then certainly there's going to be opportunities for nefarious actors to continue to exist and take advantage of these opportunities or exploits that exist in the ecosystem. But I guess as head of business development for a centralized exchange that does not offer fiat on-ramp, off-ramp, that allows me to rest a little bit easier. And the compliance and regulatory teams from other major centralized exchanges that do have a fiat on-ramp, obviously that's a key risk that could compromise the integrity of the platform if they don't keep abreast and make sure that compliance is always a priority in day-to-day operations.
Mm-hmm. And do you find that the rise of kind of stable coins also is going to pose a challenge for this? Because technically you would not really need to ever convert your coin into fiat if with the prevariance in the large use cases of stable coins.
Sure, but again, I would say largely stable coins are fungible and have value within the crypto ecosystem at large. I don't think en masse we've seen true adoption in the real world or traditional finance, wherein stable coin payments are accepted as a means of transaction.
Mm-hmm. Marcus, got anything else to add?
No, again, I'd agree completely. I think we have very strong controls, AML, KYC. We have a compliance function. I completely agree. I think the problem is you do not want those issues in the decentralized finance world to permeate into the centralized world, and that is that's a game over for an exchange that allows that to happen in a regulated jurisdiction, or even in a poorly regulated one. It's not a question of really regulation. So those checks, we've always taken the view that those kinds of checks, the sources, UBO, AML, KYC, full checks across the boards, politically exposed persons, sanctions, they should be done everywhere. So I think what's interesting to me more is in the DeFi space is some of the developments there more from a financial engineering perspective. I think they are truly interesting and revolutionary in some cases. And I think some of those techniques can be ported back into the more, what I would now call the more traditional crypto space. And I think you're seeing a lot of exciting evolutions there in staking, in earning opportunities, effectively in ways to bring capital into a market. That's where I think the decentralized finance world is looking very interesting. But I agree. I think there are definite issues with schemes or tokens that really they don't have any real value, or potentially don't have any real value. So they are, they're hyped to a very high level, and then they eventually fall. And I think the other thing is, of course, yes, bad actors have a lot more chance of doing what they want to do in terms of converting fiat in the decentralized space than they do in the centralized space. So it's an area one has to treat with caution as a more traditional platform.
Mm-hmm.
Just a quick point. I agree with Shane and Marcus. KYC compliance, knowing source of funds is very important. It's specifically more important when it comes to exchanges where you can receive, or where you much larger value fiat transactions. In my space, we work with smaller transactions. Our average transaction about $500. So that's why realistically, anyone who's going to be trying to move around some shady money or whatever you want to call it, it's not convenient to use an ATM on our end. So I guess that's why regulators are not really putting emphasis on KYC and compliance at this point for these smaller transactions. But we do have best practices to keep clients from circumventing our limits and whatnot, to use the machines, our ATMs, as a source of cleaning their money, or whatever you want to call it.
Mm-hmm. Well, I do know that can be an issue a lot of times with prostitution and the way in which they use the ATMs. Now, I think it should be legal. That's a whole other kind of discussion there. But there is definitely a tendency for that as well. How do you guys or do you guys not really care, or how do you guys kind of stop that from occurring?
How does a bank stop a guy withdrawing $100 from the ATM from going to buy drugs with it?
Exactly. Yeah. So maybe last point here, and it's a point that I always like to bring up to kind of the panels in which I speak to and whatnot, is this point about kind of a self-regulatory culture amongst the crypto community, in which we foster kind of good actors, internal guidelines and standards among the community, and ways in which we can essentially set cultural rules and regulations upon ourselves, so that we don't become overly regulated by the regulators. You know, a great example of this is kind of in the data privacy and cybersecurity space. It's only been after, you know, egregious behavior by some of the big kind of social media website and FANG websites have we seen kind of governments really turn their head and decide to go in and create legislation, and governments a lot of times they take a bazooka to instead of a paintbrush when going after these issues. So what would you guys kind of say, at least to the crowd and everyone, how can we as a community foster these types of behaviors and foster this culture in crypto to ensure that, you know, we're essentially continuously to properly self-regulate ourselves and not need to kind of worry about maybe a heavy-handed approach from various regulators?
All right, I guess I'll go first here. Maybe this is a contrarian opinion, but I would just advise every platform to act in a self-interested manner. I think playing by the rules, or as I said earlier, the mantra of ask permission rather than forgiveness, always act as if regulatory bodies will exercise retroactive retribution, is within your best interest because it results in business sustainability. I think BitMax, with an E, MEX, not Max, what we used to be, is a great use case of when you play fast and loose, things will catch up to you. And we've seen BitMax obviously lose tons of market share for more innovative competitors such as FTX because they refuse to play by the rules. It's not sustainable business. Back in the Gemini days and when I was at FBG, you know, it was dime a dozen when we'd get these invites to join this committee of regulated entities, and you basically brainstorm together and you complain about the onerous requests from regulators and compliance bodies. And I didn't really see much in terms of actionable takeaways, especially once you start involving some of the larger like mainland China players that, you know, in many ways dominate the market, but aren't willing to play ball with the rest of the Western organizations. So again, it might be contrarian, but I would just say, you know, act in a self-interested manner, and always act as if, you know, regulatory bodies will exercise retroactive retribution, because BitMax use case shows us that they're not messing around, and they will.
By the way, I don't think it's contrarian at all. It's, you know, we're just trying to set kind of internal cultural standards. So, you know, whatever they may be, I think they're acceptable from at least your point of view. But thanks. I always like a good contrarian opinion anyway. Zach, do we got time for everyone to finish, or are we almost done?
Yeah, we got 2 minutes here just because of the slight delay. So take it away, but you have 2 minutes.
Cool. Yeah. So I don't know, guys. Do you guys want to also contradict Shane there and say, no, we should all be, you know, holding hands and solidarity and kumbaya-ing our way into wealth?
I'd add a quick thing. I would agree wholeheartedly, and I think, you know, part of the reason I've got into this business relatively late, and obviously from a more traditional background, is that I now believe that the future for this technology is enormous on a long-term basis. So the last thing you want to do is mess up the early days of the business becoming mainstream and creating huge efficiency gains across huge parts of the economy, in payments, in banking, in custody solutions, in securities, in the two largest global asset classes, global equities and global fixed income. There are huge wins of DLT and blockchain becoming standard and a part of every organization out there. And I think, you know, a very vibrant technology market and a very vibrant cryptocurrency market. So I think that the win is so huge that the last thing you want to do is compromise it by conducting business that you wouldn't countenance normally in any other marketplace. And, you know, as an individual who's worked in business professionally, you wouldn't countenance taking that personal kind of risk to get involved in that sort of business. I think obviously the antecedents of the industry are different. There was a Wild West. There's still a bit of a Wild West out there, but it's very clear the regulators are coming for this business. But I think what you want ultimately is enlightened regulation that acknowledges the benefits of the technology, the benefits of cryptocurrency, embraces it in other parts of the economy, like central banks, for example, as well. And we'll have a very different world and industry in another few years' time. If there's a lot of illegal activity and the regulators really clamp down on it, that would be a real shame, because I think there's a huge future for this technology.
Awesome. Thank you so much, Marcus. Toufic, Shane, Michael. Just got to start to transition over to the other panel here, guys. I really appreciate the insights coming from all of your different corners of the room. And Toufic, that was great moderating.
Thanks, everyone. Enjoy the rest of the conference.
Thank you.
Good.